to your point about kind of what is cause for optimism, I think fundamentally corporate actions are a human problem at their base. They are a question, as we said, of lack of understanding, lack of alignment of objectives, and ultimately, as I said, divergent operating models. What is fantastic in the last 10 years, thereabouts, is the enormous uptick in collaboration across the industry. You have so many examples out there of organizations coming together to fix problems, to discuss problems in a way that there's a very, very clear line now that there didn't used to be about what is competitive differentiation versus what is not. And if you look around the industry, the amount of collaboration on non-directly competitive issues is fantastic. So I think what is really great is that you put the two together. If the core issue is lack of understanding, mutual understanding, and lack of alignment on operating models, and the core development is more talking, more conversation, more understanding, 1 + 1 equals hopefully great grounds for, I think for the first time in a long time, a profound understanding of really what the problem statements are that we can then go on to build around. But I think for me, that's the chain that is happening right now with a great degree of urgency.
And to that point, Barney, if we recognize that fees are unlikely to be increasing anytime soon, right? Prices, at least we don't see a lot of inflation in fee-based pricing models, that the only way to maintain margins or improve margins is on the cost side of the equation, right, and recognizing that reality. Do you believe investors and maybe asset managers who act as their proxy, do they care enough? Do they see enough of this problem?
Yeah, that's a good point. So I think there's two answers to that. I think one is, do they understand and care? I don't think, at the end of the day, an asset manager is a generalization of multiple job roles. I think that one of the big challenges is ultimately, does the person who's picking the stock to invest in understand the inherent frictions that corporate actions create? So basically, is the portfolio manager penalizing the issuer for being rubbish at corporate actions? No. But can the collective unit of the asset manager afford not to care anymore? Yeah. We're doing some research recently that I think the average fund manager has to rip out on a local level of each fund about $1.5 million of their operating costs every year. So mid-tier fund manager of like $1 billion or something like that. So realistically, what that means is basically if you are no longer looking at trimming. So a fund manager cannot afford just to be looking around and saying, okay, I'm going to clip my broker's comms a little bit, I'm going to be a bit better on FX. The fund manager now, because of everything the macro around the shift to passive, just the complete lack of revenue coming in and margin coming in off the active space, there is no choice. The fund manager has to find transformational savings. And where else, if we're talking about $169 billion of efficiency in the market, there's not many areas where you can go and trip over that kind of number.
Yeah, and that's what we're trying to do here. How do we link these operational challenges to the bigger business model, and recognizing that no matter how convicted you are as an individual firm to better operational efficiency, you're not going to achieve that outcome without a commiserate commitment by the bank that is above you and the investor or bank below you. So this is truly, Dan, you called it an ecosystem, and maybe is that the best learning we'd have from your digital asset world is a spirit of collaboration and looking at how we're going to join hands and really solve this problem?
Here's another factor, a driving force. People, investors, from retail to institutional. The drivers for investors are new and innovative financial services, a better way to use the value that they have, more convenience, easier access to, 24/7 movement of that value. Now, so there are drivers that they're looking for, and for parties who are able to reform their back and middle office systems, if you can't change that, you can't provide those new financial services. So to the extent that someone does, and parties are, it creates demand, and if you can't make those changes, you're left behind. So in many ways, that's a driver also of reform. So for example, parties, sovereign investors who have real estate funds with massive value that they can't use as collateral, but collateral processes don't support alternative assets. Why? Because the data is hard in alternative assets. Well, that's a big driver because that's a lot of lost value. When someone comes with a model who can provide that, then suddenly all that value that's bottled up and inaccessible is going to go to that location. And that drives the kind of reform that I think, again, in the end, it isn't only about cost, though that's certainly a driver. It's about better services on the front end.
It's another good point. I allocate to cash, equity, debt, maybe real estate, but can these technologies unlock innovation and ability for me to get risk and exposure in even new markets? Hard to create alpha in a passive index world.
So true.
Some would argue there's none to be had.
Yeah.
And that only 15 stocks drive the growth of our, 8 of the top 10 stocks are, in terms of market cap, are American. So how do we innovate and find exposure and investments that can create returns, in the future outside of our traditional world? So, and maybe, so why are we here at the end of the day? Why are we talking about this? Are we the generation that solves this issue and fundamentally addresses it? Maybe that's the question. My son just graduating next week. I have another son in the capital markets world. Is he going to be sitting on one of these panels 30 years from now, bemusing the challenges of lineage and corporate actions data, or are we going to leave this market a better place than we found it? I think that's kind of at least what motivates me. I don't know if you guys feel that you have a duty to solve the problems you had in your youth before you retire from this industry. Is that important?
It absolutely motivates me, and Barney, I'm sure you're the same way. We have to do better. So look, this real investor value, the friction that's in legacy financial systems has a cost that folks don't see, but there's a cost that no matter how it's borne, it's ultimately borne by the investors and the returns that they get. We have a responsibility to maximize their returns as financial institutions. That's true. But there's also access. So even in the alternative assets case, certain investors get access to these alternative alternative investment opportunities, which may produce better yield, but others do not. Whether it's accredited or not, or just globally, parties who simply don't have access to good financial systems. I believe we have a responsibility to make the best investment opportunities available to everybody. I'm driven by that principle, and I think I'm at the place where you can actually pull that off in an enormous way.
A very big statement right there. I mean, as we see the growth of private markets and the fragmentation, lack of standards, lack of process, and what you said, which is really important, lack of participation. I'm not rich enough or qualified enough to participate in private markets. And so it's denying capital that otherwise would flow to that area, but it hasn't created a level of transparency and efficiency that would extend its investment opportunities to mere mortals with less than 5 million in under investable assets.
And these are questions of data access. So look, in order for investments to be fair to a retail, to my teenage son who happened to get involved in the Reddit case from a number of years back, the meme stock piece.
Yes.
Proper information out to those edge investors is very important. And so we need better delivery models in order to make that information much more accessible. That's a key part of what we're driven to do and what these new models offer. But along with that comes access. Along with access becomes better opportunity for parties. And it's certainly a responsibility that we have.
The capital will flow like water if you could create these kind of things. It's an untapped source of capital. Sorry, Barney.
Yeah. No, I was just thinking, I don't think we have any choice anyway, to be honest. I mean, I agree that we all come into work wanting to do this better and nowhere more so than in the corporate action space. I mean, if you think corporate actions is the most passionate subject, it's like a club. Anyone, the minute you say that you've been tarnished by the corporate actions problem, people suddenly put their arms around you and say, oh my God, me too. So, but I think all of the trends that you're talking about in terms of retail participation, the shift to private assets, the shift of liquidity away from listings towards delisting activity or private, all of it is basically, it's there in the numbers. I just don't think anyone has any choice. Every one of these pieces, the money is moving. And so the only real question is whether you follow it or whether you basically, or you're too slow. But at the end of the day, if you rely on, basically just moving listed securities around different portfolios today with high degrees of friction, you're not going to be in business in 10 years. It's the portfolio, as you said, it's real estate, it's private securities, it's doing it to a high degree of efficiency for somebody who expects those private securities to move in real time with complete valuation, complete visibility around the whole thing, and they should all be financeable and mobile. To describe that, it sounds to any banker like an absolute pie in the sky, but at the end of the day, that's pretty much what's happening right now. Mm-hmm. It's just that we're not joining all the dots. But as I said, if you are just basically trying to run an S&P 500 fund of listed equities and hope that basically your margins will just carry through the next 10 years, it's a flat no. Just cannot happen.
So it's unsustainable, fundamentally unsustainable. There's a lot of unsustainable things in our world that we seem to kick the can down the road and fail to acknowledge. And maybe that's why we're here, to appeal not just to the logical, technical personas that we're trying to reach with podcasts like this, but perhaps the emotional. The time is now. Leave this place in a better state than you found it. And maybe that's the best thing you could achieve in your career, that your kids don't suffer the same. I'm seeing a team of psychiatrists as a result of my corporate actions experience. So I can tell you, it's a big club. So the mental health community is well served by this domain. But that's ultimately, people ask me, why are you talking about this? Why did we want to do these kind of podcasts? But this is the type of engagement. Now is the time to actually address it and fundamentally rethink. Reimagine is a cliche, but I do believe that this is the process. This is the time. The technology exists. The mentality, I hope, exists. And the recognition that our current world is unsustainable, I think, may be the cherry on top.
Yeah, absolutely.